Good morning, good afternoon, good evening, and welcome back, hipsters, to another great episode of Hips News. With the past week's global inflation on the rise and prices on necessities increasing, it looks as if we are a world economic collapse. In October, Japan will see an inflated increase it hasn't seen since 1995 or 1996, with the yen at this time of recording 156 to the dollar. In this episode, we will discuss how will people adjust, live, and hopefully survive the global economic crunch. I'm Vessel 1, and with me, Vessel 2. Vessel 2, how are you today?
All is well in the kingdom, Vessel One. Yeah, another interesting show. How goes it with you?
I can't complain, my brother. I can't complain. It seems like the wicked is always up to something, and if it's up to them and they get their way, they're gonna collapse this society and they're gonna try to push for this cashless one. And as we can see how things are turning out, but let's stay hopeful and let's break it down.
Yeah, I agree. The devil never sleeps.
Hold up, wait a minute.
Hidden in plain sight.
Good morning, good afternoon, and good evening. What's in your community, locally and globally? I'm Vessel 1, and with me, Vessel 2.
Hey, quick question.
Is that hidden in plain sight?
Vessel 1, Vessel 2.
Talks about hidden in plain sight.
Wake up.
Hidden in plain sight.
Whether you're buying a ticket for the subway,
Big Mac.
stopping by McDonald's for lunch, or shopping for a computer. The prices of these things don't change much in Japan, but in the US they're going up, and inflation hit a 3-decade high in October.
Whereas in Japan, inflation is about zero, and has been that way for nearly 30 years. In fact, there have been periods when prices were actually falling, deflation.
So we went shopping around Tokyo to see how low prices that may seem great for our wallets could actually be one sign of a less dynamic and slow-growing economy.
If you want to buy electronics in Tokyo, this is the place to be. And coming to Akihabara is also a good place to compare prices with the US and see how Japan is dealing with inflationary pressures differently. In the US, the price of computers jumped 8% in the month of October compared to a year earlier, whereas in Japan, prices of these notebook computers actually fell a little more than 1%.
And one of the reasons for that big difference is demand. As the U.S. has begun to recover, at least economically, from the pandemic, there's been an upsurge of demand. The U.S. has seen a lot of supply chain pressures, including shortages of parts and materials like semiconductors that go into so many products, including electronics. And also, container ships have been blocked at ports such as Los Angeles and Long Beach, so they're backed up, and that means a shortage, and in some cases it means retailers feel that they can or must raise prices. Japan faces many of the same supply chain problems as the U.S. does, but in general, it has not resulted in price increases in Japan. One reason is that consumer demand in general is not so strong in Japan and hasn't been, and that's part of the inflation story, that Japan has never really experienced what we see in the U.S. right now. But companies in the U.S. found it hard to meet that higher consumer demand because they aren't able to find enough workers. So that's driving them to boost salaries to recruit workers, and the cost then is passed on as higher prices. And you can see that happening on a menu at McDonald's.
Big Mac はこちらですね. Here in Tokyo, a Big Mac was the equivalent of about $3.40. In the US, they're actually raising prices at McDonald's, and according to the company, that's largely because of wage increases.
McDonald's said wages have gone up at least 10% so far this year at U.S. restaurants. And a survey finds that companies in the U.S. are setting aside an average 3.9% of total payroll for wage increases next year, the most since 2008. In Japan, we just haven't seen that wage price cycle develop. One reason that wages tend to rise more slowly in Japan is because of a more rigid labor force. people are staying at companies for a very long time, and they really don't have the flexibility to switch jobs without great personal loss. So companies are not really under pressure to offer these people wage increases.
Because wages don't go up here, people aren't willing to open up their wallets. One survey by the Bank of Japan found that about half of people think of price first when making a purchase, and they tend to reject any retailer that raises prices.
Companies have found they're better off keeping their prices level. So, for example, train ticket prices in Japan haven't gone up that much for the last 30 years. Whereas in the US, the minimum fare on the New York subway has more than doubled over the same period. Besides train tickets, you see flat prices really all across the economy. For example, Aeon, which is one of Japan's biggest retailers, putting signs in its stores saying, "Prices frozen!" exclamation point, at least until the end of the year.
Prices that don't change very much can be reflective of a society that doesn't change very much. And that could be a good thing or a bad thing, depending on your perspective.
Japan is still a pretty vibrant place. It's a stable society. It has kept its unemployment rate low, but it tends to be accompanied by other phenomena that are not so favorable, such as static wages, such as an economy that seems to lack some of the dynamism of the US, where you have a new company like Tesla storming onto the scene and seizing a big part of a market like cars. You can see some of that recently in growth figures. Japan's GDP shrank at an annual pace of 3.6% in the third quarter, whereas in the US the figure was 2.1% growth. Low prices and prices that never go up may sound like a good thing, but they can also reflect larger economic problems in a country.
What say you, Vessel 2? How do you feel about this?
Yeah, the price hikes is coming. They say starting tomorrow, it's official price hike season where multiple items are going to go anywhere from 10 yen to 20 yen higher. So everybody's going to have to come up with ultimate or alternative means to either save money or try to find cheaper products to purchase.
Yeah, exactly. And yeah, again, like I said in the beginning, that yeah, fast food is something that you really don't want to steer clear. You want to steer clear away because it's not really balanced or healthy. But most people gravitate to the fast food joints because they're um, cheaper and more reasonable to the budget that people go for. But they were saying on I believe it was on one of these news, NHK or something, that the cheeseburger from was it 2009 or something, was at 80 yen, but now starting from October or tomorrow, they're going to be they were 130, now they're going to be 150. But the question is, will this change that McDonald's is doing? Will it hit them in their profit or sales? That's the big question.
Yeah, we'll have to see. But I mean, even at 150, that's still what the yen rate. I think the yen rate yesterday was 144. You said today was 156. So it's still roughly about a.
Yes.
So
Yeah.
technically speaking, they're still sitting at some products at McDonald's at, or it's still on a dollar menu.
Yeah, that's good. Yeah,
So
that's true.
I'm pretty
Yeah.
sure that will drive a lot of people to McDonald's if they continue to keep it at that price. If they can't afford other places to eat fast food, well, not fast food, but other restaurants to eat at, then McDonald's might come off making a little bit of profit.
Yeah, that's true. It could be so. Yeah, financial economic tip for those servicemen and women in the armed forces. It's a good opportunity to now change your dollar to yen, and you can double it. So you can double your money if you, especially if you're looking to live here longer or retire. But on that note, yeah, let's continue with this inflation dilemma and see how things goes.
This is the image that has been stuck in my mind for years. Here I was, below the massive towers of the Tokyo Metropolitan Government Building, and I came across this blue tarp with solar panels on it. This was quite a scene for me. That's because back in Vancouver, where I lived most of my adult life, I was used to seeing scenes like this. Why were the visible homeless I encountered in Tokyo so different? Thus started my search into understanding why the homeless in Japan are different than the homeless in North America. Where I started to find answers was in the research work of Professor Tom Gill.
My name's Tom Gill. I'm from England, but I've lived in Japan for about 25 years, and I'm a professor of social anthropology here at Meiji Gakuin University, Yokohama campus. There are a number of things about Japanese society which makes it a lot easier to deal with homelessness than in other industrialized countries. For a start, the level of drug abuse is much lower in Japan than a lot of other countries. It's pretty difficult to get hold of hard drugs in Japan unless you know a yakuza, a gangster who will supply you. And for the most part, guys who become homeless in Japan don't do drugs other than tobacco and alcohol. Yes, there are a substantial number of alcoholics in the Japanese homeless population. There are also a considerable number of compulsive gamblers. And of course, even if you are getting livelihood protection money, if you spend it all on alcohol or horse racing in the first couple of days of the month, you can still end up on the street. Another important factor is that Japan has a very conservative approach to treatment of mentally ill people who are generally institutionalized. If you look at statistics for mental health, in Japan, you're much more likely to be put away in an institution if you have a mental health problem. We never went through the processes that were called mainstreaming in America and care in the community in Britain, which are both kind of code words for shutting down mental hospitals and letting mentally ill people out into society, and which might have seemed like a good idea. Some liberal people did support that move, but unfortunately there wasn't the backup to follow what happened to these people after they were let out, and a certain number of them ended up being on the streets, and that's one of the reasons why you have a lot of people with mental health issues in the homeless population in many industrialized countries. Then a third factor is that Japan has managed to keep out of wars and conflicts since the end of World War II. So as a result, traumatized war veterans, which are another large component, particularly of the American homeless population, we don't have that in Japan either. Where are homeless people? Urban parks, riverbanks, streets, station buildings, and other buildings. So the kind of archetypal situation where you're walking along the street and you encounter a homeless person is a lot less likely to happen in Japan, because a lot of them are not in that part of the urban space. Most of them do try to keep clean. One of the reasons why they tend to gather in parks is because they generally have public toilets and washrooms there, which helps you to maintain a basic level of hygiene. On the question of begging, it's true that very few homeless people in Japan beg. Far more likely, as a way of making a bit of money, is can recycling, and sometimes newspaper and magazine recycling. That's the main way for putting together a little bit of cash. Why they don't beg? I think there are push factors and pull factors. Japanese are disinclined to beg. They're also disinclined to give to beggars. And these two things go hand in hand. In countries with a strong Christian tradition, or indeed a strong Muslim or Hindu tradition, giving to the poor is deeply ingrained in the religion and the culture. There's nothing quite like that in Japan. So people are less likely to give money to beggars. I mean, they're not used to being begged off. It's a chicken and egg situation, really. The fact that, you know, it's shameful to beg, and you don't want people to know that you're homeless. You don't want people to know that you're unable to look after yourself. Pride, shame, yeah, these are also factors.
Vessel 2, what say you?
Yeah, Japan does have a homeless problem. I've seen it personally. Hopefully, with this inflation taking place, there's not an increase in the whole homeless population. We'll have to wait and see how it all plays out, but I don't understand the mentality of not helping the homeless. Every time I was able to do something, I always pretty much did what I could when I saw homeless, if I knew where they were at. For example, last time I was working in Tokyo, there was some homeless in a park area that we had to patrol around, and we would bring them drinks in the wintertime, hot drinks, canned drinks, so they can keep warm and have something to drink. And every so often we would drop off food for them. But yeah, it's a problem. It's a big problem. What say you, Vessel One?
Well, it's only, I think it's only a beginning. Just recently, just to put it out there, for the past couple of weeks, as I was walking to the both stations rather, well, not taking the train as well, but Gakude Gaigaku, recently there's a homeless elderly woman, maybe in her late 50s, early 60s, and she just recently popped up there. And for the past couple of weeks, she's been there, laying in the middle of the station. And it's not really, you know, of course, not begging or anything, but she has her cardboard and her newspaper, and she's laying there. And then, and Roppongi, as you come out the Hibiya line, and you're going up those stairs to the main street where the almond shop is, heading towards the, I guess, Burger King on that side. And there, for the past couple of weeks, there's another, and it's a female, laying in the middle of the station and homeless. But yeah, I think it's only the beginning. Okay, what's next? Moving on, and our next article.
Got a Bloomberg article.
Okay. All right.
Endo, we have higher than expected Japanese inflation. Can the BOJ continue with YCC yield curve control? At what point do they blink again with the pressure emanating from U.S. yields?
Well, this is the big question, Danny. Like you mentioned, figures this morning saying Japanese inflation, core inflation, 2.8%, reflecting fairly hefty increase in energy and food prices. Some evidence also that the inflation story in Japan is becoming more broad-based now, not just imported inflation. And that is certainly raising questions about just how long Japan can remain as this holdout, both in terms of negative rates and, of course, the massive money that it continues to put into the economy to support it. The Bank of Japan decision is due on Thursday. Most people don't think that they will change compared to what the rest of their peers are doing. But as you say, with inflation continuing to head in the wrong direction, continuing to head away from where they want it within their target zone, there are ongoing questions of whether or not the BOJ will at least pivot or modify some of its policy in the near term.
When you take a look at the inflation print, the relentless strength in the greenback and just the hopeless policy and data divergence between the BOJ and the Fed, there's not much they can do.
There isn't much it can do unless the BOJ changes its policy. And to your point, at the moment, given the full commitment of the BOJ, dollar-yen is essentially at the mercy of 10-year Treasury yields, which of course have gone up above 340. But importantly, when you look at history, 10-year Treasury yields tend to peak around where the cash rate peaks. And at the moment, expectations for the cash rate to end well above 4% means that there's a lot of upside for 10-year Treasury yields over coming months. And in that sense, it also means that the prospects for high dollar-yen levels, we should all be expecting now.
100 from the Fed, what would that do? Is that on your list of possibilities between now and next week? Will we have a better idea?
Our sense is that 75 is still sort of the more likely scenario, but the messaging will be important because, if they're very much committed to this aggressiveness in terms of hiking, particularly because of the fact that they want to see several lower CPI prints. And now we start from zero because the July lower print is sort of an anomaly. The August print is now in line with that 0.6% average in the first half of the year. So now we need to see several prints from here. So that means at least, you would think November, December is when the Fed will sort of change its tune.
Rodrigo, what will it take for any kind of change to come from the BOJ, given, of course, where the Fed is going, given where global central banks are going? I mean, this chart on the Bloomberg showing the history of yen intervention, the last time that we actually saw some sort of intervention from the Ministry of Finance was in order to weaken the yen. Will we see something to strengthen the yen coming from the Ministry of Finance or perhaps from the BOJ in terms of yield curve control changes?
Well, we think the pressure is rising. And of course, one thing we need to remember is that CPI print is coming on the 20th of September, which is 2 days ahead of the BOJ meeting. At the moment, dollar-yen is at the mercy of higher levels from 10-year Treasury yields. So we think the pressure is increasing for the BOJ to do something. Now, in terms of intervention itself, history tells us that unless you have coordinated efforts coming from other central banks, intervention will prove to be futile. So to us, the key driver will be that CPI print near term. If it does print, above 3% or even at 3%, it will be a massive surprise. The market is looking for a print of 2.9, so it could happen. And certainly the pressure on the BOJ will increase. And as you say, what can they do? It will have to be an adjustment to the yield curve control policy.
And what about pressure on other Asian central banks? Given the strength of the dollar, we continue to see foreign exchange reserves being depleted across the region.
Well, I suppose our general sense here is across not only just emerging markets, but also, countries that are suffering from a terms of trade shock from this energy crisis, is that, it's super inflationary and the central banks will need to step up their aggressiveness in order to fight that inflation, even if it comes at the cost, or, regardless of whether it comes at the cost of lower growth and even rising unemployment.
When you take a look at some of the commodity and risk currencies like the Aussie, is it really the US dollar that's driving downside at the moment, or is there concern that we might see demand destruction?
Well, the Aussie, as you say, is a risk-sensitive currency, and at the moment, the Australian economy, the terms of trade is super positive. That is being reflected in the crosses. So the Aussie is performing super fine against the New Zealand dollar, against the euro and the pound. But when it comes to the US dollar, it's all about that procyclicality and the prospect of slower growth, the prospects of a Fed very aggressive in terms of its hike. It drives the US dollar higher and it weighs on the Aussie dollar. And we should should be ready for lower levels if the Fed continues to be aggressive.
Across the emerging markets complex in Asia, what are you watching specifically, and do we continue to see the yuan playing that kind of anchor role within that space?
Yes, there's an anchor role, but our sense is that, for one, you look at China and inflation is not a problem. You look at China, it's slowing down, has massive headwinds coming from the property sector, whilst at the same time there's a huge confidence issue within the consumers because of the zero COVID policy. So how does China get out of this problem is through infrastructure spending as well as the external side, the export side of the economy. And that's where lower CNY plays a part. But the POC is essentially trying to slow down the depreciation of the CNY rather than prevent it. So that anchor role, as you say, is important, but is gradually moving towards that 7%, which we think will happen before the end of the year.
Sherry just mentioned this, view that we see with account buffers being worn down across a lot of these emerging nations. Who's most at risk, and are we going to see a repeat of previous bouts of Fed tightening, or are these kind of financial houses in better order this time around?
In terms of history, I would sense that they are in better shape. But certainly, you look around and those countries that are suffering from that energy shock are the ones that are more exposed and also the more indebted. Like, for instance, in South America, Chile, despite the fact that it's better economically than others, it does have more exposure. So we have to keep an eye on how things develop as well over the coming months.
Thoughts, questions?
Japan always has to be the oddball out. But they're already at a negative interest rate, so I don't see what they can do. And they've already said that they're not going to, well, it's been said that the government is trying to make sure people's wages go up. And I don't see that happening at every company. Maybe some bigger companies, bigger name companies, they might be able to do it, but the smaller companies, they're not going to be able to raise wages. And if this inflation is just getting started, then yeah, we're in for some hard and heavy times coming ahead. What say you?
I totally agree. Yeah. And if they do decide to raise wages, will it be in the time frame necessary or needed for them to recover? Again, we're just coming out of a quote unquote so-called pandemic, 2 years with this pandemic, and now we're having a hike of inflation. So, I mean, I don't know. I guess we have to sit and see, wait and see. Moving along, questions raised over impact of Japan currencies market intervention.
Japanese leaders have watched for months as their currency plunged against the dollar. Now they've taken action. They've stepped into the market to buy yen and sell dollars for the first time in 24 years. The operation came after the Japanese currency briefly tumbled in Tokyo trading, with the greenback climbing to the upper 145 yen range. The yen temporarily recovered after the intervention. The dollar fell by more than 5 yen to the lower 140 range. A senior finance ministry official told reporters he wouldn't say what tools the authorities have to support the yen, but he said they will act again if necessary. This comes as the Bank of Japan is set to maintain its massive monetary easing policy. That's in contrast to the recent interest rate hikes by the U.S. Federal Reserve. BOJ Governor Kuroda Haruhiko told reporters the bank won't raise rates for the time being. That means investors will likely keep selling yen and buying dollars, expecting the rate gap between the U.S. and Japan to keep on widening.
Yeah, the cost of doing business now, if you have to buy something in dollars, you paying almost double.
Exactly. So again, like I was saying, for those servicemen and women in the bases overseas, especially in Japan, this is a good time for you to take your money and buy, and you can double. You can double.
Yeah, if you're living off base. It only makes sense. You take your US dollars and buy as much yen as you can. Therefore, your rent will be cheaper in the long run.
That's right. That's it. Right. And speaking of this intervention and the rates dropping and whatnot, as I was mentioning in the past video, we was talking about just coming out of the pandemic and this economic crunch. This is not, again, we can't forget, less than 6 months ago, they brought all over the Ukrainians. And how is this is going to affect that situation as well? I mean, taxes going to be raised, and people are providing shelter and places and stuff for these Ukrainians. We can't forget about this as well. How is all this going to play out? So, yeah.
Yeah, it's interesting. They
Mhm.
they did bring the Ukrainians over here, and yet we just saw a video where they have homeless Japanese people. So how do they justify that? I don't know. But they do what they're doing under the guidelines of, I guess, image is key.
Yeah, I guess. Most Americans fear 1930s style Great Depression.
Most Americans fear 1930s style Great Depression. Poll. The majority of American voters believe a 1930s like Great Depression is on the way, according to a new survey by Rasmussen Reports published on September 28. The telephone and online survey was conducted on September 22 and 25 among 1,000 American adults and has a margin of sampling error of plus or minus 3 percentage points with a 95% level of confidence. It found that 57% of American adults said they believe it's likely that the United States will enter a 1930s-like depression over the next few years, including 21% who think a depression is very likely. 32% don't think a depression is likely, and another 12% said they are not sure. The findings are very similar to those found in a May Rasmussen Report survey, in which 55% said a depression was likely in the next few years. Inflation has hit a two-decade high since President Joe Biden took office, having started at 1.4% in January 2021, while wages have not caught up. Real average hourly earnings of U.S. workers have fallen by 2.8%, seasonally adjusted, over the last 12 months, according to data from the Bureau of Labor Statistics. Separate data compiled by the Heritage Foundation and released on September 22 shows that Americans have lost the equivalent of $4,200 in annual income under the Biden administration amid soaring inflation and increased interest rates. Americans looking for extra jobs. The Heritage Foundation noted that the average American worker's real annual earnings increased by $4,000 under former President Donald Trump's economy. The current volatile economy has prompted millions of Americans to seek side jobs to bring in more money over the past year and keep up with the increasing costs of everything from food to gasoline, according to a recent survey by workforce service platform Blue Crew. A total of 57% of Americans said they've sought out extra work at some point over the last 12 months, the survey found, including many who are already working 40 hours during the week. Blue Crew surveyed more than 1,000 American professionals from various backgrounds, including those who are currently in employment and those who are unemployed.
They trying to get everybody's looking for that side hustle.
Yeah, well, again, this if it's up to the elite, or or especially the leaders of the governments, they want this to stress out and things to collapse because they can usher in their cashless society. They're going to renaissance this new era of currency or economics. So the world has got a lot to deal with at this time.
So this is NHK World News. Yen drops to 124 yen per dollar.
The yen continues to plummet, at one point falling to the 144 yen per dollar level on Wednesday. That's the weakest since August 1998. The Japanese currency has dropped by around 7 yen over the past 10 trading days. The drop in value comes after a non-manufacturing business activity index in the U.S. posted a stronger than expected figure on Tuesday. The U.S. 10-year bond yield went up to over 3.3% following the announcement, the highest rate since June 16th. Market players believe the Fed will continue to raise interest rates despite the risk of cooling the economy. The widening interest rate gap between Japan and America has prompted traders to sell their yen and seek the higher yield of the dollar. The yen's depreciation has picked up pace since Fed Chair Jerome Powell made it clear in a speech on August 26th that he will keep raising rates. Meanwhile, the Bank of Japan has indicated it plans to continue with its massive easing measures. Analysts say they expect the yen sell-off to continue as long as interest rates remain low in Japan.
Okay. Well, first of all, it's a pleasure to be on your program. And, when you talk about inflation, it's kind of like cholesterol. There's good cholesterol and bad cholesterol. What we're experiencing right now in Japan is bad inflation. What that means is it's a cost push inflation, where costs have gone up, but wages have not gone up accordingly. Therefore, as a retailer, you're really squeezed because all of your costs have gone up, but you're not able to really pass on that cost to the consumer. And so we have been, kind of in a difficult situation right now. I mean, when the Bank of Japan was looking at 2% inflation target, they were looking where there'd be demand pull inflation, where actually wages would come up and you'd go into a virtuous cycle where then people would buy and then prices would go up and wages would go up, especially when 60% of Japan's GDP is consumer spending. So this has been the critical issue that hasn't moved the needle in terms of our economic recovery. So it's been very weak. And as you know, we've been in deflation for over 30 years. And now we've had this pandemic that's affected us. So this point of a 2%, less than 2% inflation has been a cost push. The only way to deal with this, of course, obviously, is to try to change your product mix. We can't just we've had to increase our prices. As of March, we increased 5 to 10% depending upon the products. It does not cover the increase in costs, and so we have to really look at it as well as jigger our product mix. And so how can we say some more drinks, which has more profitability? And as you know, at one time, due to supply chain issues, we didn't have French fries in Japan. So that was a whole nother issue altogether, separate from pricing. But you mentioned the yen. The yen exchange is very important because Japan imports 60% of its food, not to mention 99% of its energy. And so this has caused a huge issue. We've originally looking at around 115 yen to the dollar, and all of a sudden, in a few weeks, it went over to 131. Now it's at around 126. But this is an extreme cost. And so I also import food. And if you import food, you can't even fix your cost, much less than how do you figure out your selling price. And so this has been a difficult issue, not only for myself, but for the whole industry.
There you have it, folks. The economic crunch is coming. And the question is, how do we prepare, or what shall we do? Professor Two, any comments?
If this is their plan to crash the economies globally, then people are going to have to start going back to the natural way of things, which means bartering and, if possible, growing your own food and taking care of one another as much as possible as well. It's a sad outlook. The governments around the world, they definitely need to be chin checked And Japan has been, as he said, it's been in deflation, but it's been in stagnation since the 90s. So this situation is long overdue in Japan. So I guess it's their time to actually deal with their economy and try to make it work as best as possible. But Japan, the government just announced that they're going to start spending more towards the military also on top of this inflation. So yeah, the outlook is not looking too bright.
It's very grim, isn't it? Yeah.
And you know, it's they have a high suicide rate, so hopefully
there you go.
It doesn't increase in the next couple of months, but you know, we'll see what happens.
Yeah, well, one thing for sure, from what I've seen, if you live in Japan, and especially the foreigners that have been here for over 10 years or so, from what we've seen of this episode, I could see that more people will actually turn to alcohol. It's going to be definitely alcohol prices will rise. If they don't eat, they're definitely going to drink.
Yeah,
And
the night's news, not to cut you off, but to add on to what you're saying, on the news tonight, they just said that there's a run on alcohol because tomorrow the prices are going up. So yeah, a lady was on TV tonight talking about she don't stocked up her alcohol until it will last until the New Year celebration.
Yeah, so you got all these elders and people that's gonna, if they're gonna be depressed, they're gonna drink it up. But that means that again, like you said, how they're gonna equip if they're gonna have alcohol and that's their outlet. When the pandemic happened, they were, people together, that normally aren't together. People go out drinking. This is a very social society, and now that means they got to stay home and just to cut corners to save money. And at that time, you and I both talked about there was a higher domestic violence rate. So it's going to be an interesting time between now and the new year. So, yeah.
I agree.
Well, people out there in Potland, thank you again for tuning in and supporting, and for those that's they're listening, we appreciate you. This is Vessel 1 signing out with Vessel 2, and Vessel 2. Can you give us your final thought?
Yes, everybody, please comment below. Let us know how this inflation is affecting you in your area. If you have any tips and advice on how to weather this storm, make sure you comment below. You can send us an email at hipsnews6@gmail.com. Also, if you want to get in touch with us that way, we appreciate you listening and tuning in. Make sure if you have loved ones that they know that you love them. Stand on your square at all times. Peace.
Peace.